Welcome back to another C3 Live at 5. I'm Al, and today we're going to be going over a market update. So be sure to stay tuned through the whole video. We are going to be going through a market update right at first, and we're also going to go into the NFT and the metaverse and what's new and fun in the play to earn games. But we're really going to be talking about market mentality and how uncertainty affects our markets and what to expect. And where's our market bullseye? So before we get into that, let's just do an overview and see what the market looks like. So as you can see, we have Coin 360 pulled up on the screen, and this is where we like to start every day. This is the performance is on 1 hour, and the block size is on volume. So as you can see, pretty neutral across the board. The lighter the colors, the less aggressive the bleeding or pumping that is going on. So we have light reds, light greens across the board. Little bit of darker greens over here, ONG, GRT, but pretty modest across the board. So Bitcoin is sitting at 42,550.68. ETH is right under $3,000 at 29.18. Solana sitting at $96. Luna 88 at 105. So a couple of good projects. Market's looking like it's somewhat stagnant, but let's go ahead and take a look at Gecko and see what Gecko is telling us. So we're getting a little bit more green on the screen. This is exciting. This is something that we're looking for. We're starting to see we got 1.1% on the day for Bitcoin, 1.7% for Ethereum, 1.8% for BNB. We got 1.8% for Cardano, 4.7% for Solana, 3.3% for Lunaterra. So this is some good numbers coming up. We got 5% on AVAX or Avalanche, and that's a great project. If you haven't checked it out, highly recommend you do. But we're going to look at our top performers right away because, well, that's just the most fun. And so we got the Mina protocols up 12.3%. Hedera is up 9.6%. Gala is up 8.1%. Curve DAO token 7.4%. Thorchain 6.2%. Kadena 5.8%. And then the Graph GRT 5.3%. And Avalanche, like I said previously, 5%. So the market's looking a little good, but as you guys are familiar, these percentages are not really typical to crypto. This is still kind of considered boring in our world. So we'll see what kind of bloodshed we have. Way better to see this. I mean, the worst in the top 100 is only down 6.5%. So we have Crows down 6.5%, which is kind of surprising after the Super Bowl and all of the commercials going on, but okay. We have Ethereum at 5.3%. SLP, you've heard that on this channel. They're down 4.7%, but they are making moves in the Axie Infinity world. So not really worried about that. AMP's down 4.1%. Dogecoin down 2.5%. It's a pretty modest day across the board. Let's see how stocks are doing. So over here, we have our stock overview, and you can see Google's up 0.93%. Amazon's up 1.2%, Tesla's up 1.83%, Apple's up 0.14%, MicroStrategy's down 0.01%. So it looks like the stocks are correlated pretty efficiently with cryptos. There's a little bit of hits and misses. Some things are up, some things are down, but nothing's made any drastic moves. So let's go back here and talk about what this chart is. So when we're looking here, we want to know how much money is going out longer term. So we're going to go to the day. And as you can see for the day, we're getting a little bit more green. That's good news. That's exciting. This is what we're looking for. But we really want to see confirmation on our charts. And to just be straightforward, for those of you that aren't trying to sit through the stream and just want to know a quick opinion, looking like we got a short-term pump ahead, most likely going to end in a consolidation period again. But we're going to explain why. And this is really important for us to understand. And before we go deep into our charts, I first want to prep us with the right mentality. And I found that I noticed when I'm looking at the market, it's typically in correlation to kind of like looking at a casino. And you have to understand, and I know this might leave a sour taste in some people's mouths, but you have to understand the house always wins when you're at the casino. Now, you can learn how to play the casino's games to give yourself an advantage, but you're playing against a disadvantaged game. You're playing against somebody that is already has the odds to win. Well, the market is the same way. This is a business model. There's market makers, and there's somebody that is buying everything that you're selling, or there's somebody that is selling everything that you're buying. And you have to start asking yourself, who's that person? Well, that person is what we like to refer to as the market maker. And the market maker is the person that we're playing the game against. So we're in the casino of crypto and we're playing the house. And you know the house is always going to win. So what we want to do, and the best way to play this game, is find out where is the house going to win. And that's what we call the bullseye. So we look for the bullseye for the market. Where does the market maker have the ability to make the most money? Because the market maker is not in the business of making you money. It's in the business of making itself money. So you have to think that you, as the retail trader, are looking at the market kind of in a controversial manner compared to how the market maker is, because you're following social sentiment, whereas they're the ones selling or buying what the social sentiment is driving. So when you look at it like that, you realize that it's almost better to go in it from an opposite standpoint. So right now, the social sentiment with all the uncertainty is a more of a bearish outlook. And so when we're looking at a bearish outlook, people are slightly concerned and the shorts start stacking. So for those of you not familiar with shorts, when you set a short trade, that is you betting that the market is going down. And so we are building more and more trades with the bet that the market is going down. So therefore, in simpler terms, if the market does go down, the retail trader that is betting that it will go down will make more money. Now let's think about what I just previously said. Is the market in the business of making the retail trader money? So then I have to start thinking that that's less likely than it driving upwards to hit the liquidation levels to liquidate everyone that is shorting the market. So that's why when we see such uncertainty and such bearish sentiment, it's actually in a weird way slightly bullish in a short-term manner. So we like to kind of go against the grain on this channel, and it seems to be a little bit more of an effective approach for us. So we'll go ahead and dive in now that we have a little bit of mentality to understand what these charts are telling us. So here you were looking at the total market cap of all crypto, and we're on day candles. And you can see we came so close to breaking out of our channel. So let me make this a little bit bigger so we have some clear visibility. Right here, this was an exciting moment. We wanted to break out of this channel and retest it. And that's what we were banking on. That's the bullish scenario. And the reason that we do this every day is because that's not a guarantee. There's no guarantees in this market, and there's no way for us to really predict. You can only make our decisions after things have been confirmed. We can anticipate, but predicting is a little bit more challenging. So here you can see the market got rejected at our resistance inside our channel, and we are falling back down in it. So the total market cap looks slightly bearish on the day, as well as the shorter time frames down to the 12-hour and below actually has a little bit of a bullish outlook. But when we want to look at the week candles that just got printed, this is a pretty bullish indicator. So remember, when you're looking at our charts, we have extra tools added onto our trading view that make our life a lot easier. Those tools that we use the most are Market Cipher and Token Metrics. And if you're interested in our tools, we do have links below us that will show you how to use Market Cipher and get you set up with them, as well as Token Metrics. And Token Metrics does have a 30% discount going due to Valentine's Day. Happy Valentine's Day. For the next couple of days. So you might want to check them out. The link will be below, and we'll be talking about why Token Metrics is so valuable later, because that's where we find our alts. We go on their indices and we find these gems. But enough of that tangent. We'll jump right back in to the total market cap. And you can see we have a little bit of a bearish play out going out on the day, but on the week, this is looking like we're getting ready to break out of our channel. So I'm really hoping that we can have some sort of rally through February, and I'm kind of ambitious at this point with the way the charts are looking that that's going to be the case. Unfortunately, there are some signs of possible concerns. So one of the charts I want to bring to your guys' attention is Total 3. So this has been described on the channel before. Total 3 is the total market cap, with the exception of Bitcoin and Ethereum, the two top dogs. So this is number 3 and below. And as you can see, we're sitting at $711 billion currently in this moment. And we are on some pretty major resistance right at $750 billion. So we need to break through the resistance, and it's not looking promising right now. In the longer time frames, it looks like we do have hope for getting through the resistance, but in the shorter time frames, it's looking like a possible head and shoulders play out. And that's something that we really want to be careful of. We want to be cautious of a possible play out of a head and shoulders formation. And for those of you that aren't familiar with trading terminology, a head and shoulders formation is a little bit more of a bearish play out. And it's typically seen in the charts. And I think we can see it best in the 1 hour candles. And we'll also pull up Bitcoin because it's doing a very similar formation. So right here, we can see that we have a nice head. We have one shoulder there. We have another shoulder there. So we go head, shoulders, and then sometimes you can come down to the knees. And when it gets really ugly, you can follow all the way down to the toes. And so we go head, shoulders, knees, and toes. And that's just a fun song to sing when money is just hemorrhaging out of the market. It's not a fun thing to be in the market while it's happening. They're normally pretty violent shakeouts during these formations. So there's something to take very seriously and to take with caution. So we're watching this. It's very important to pay attention to how this formation plays out. But we can also see right here, let me get rid of some of my markups. We can see on our trend line, we have fallen under our support for total 3. So since January 22nd on 1 hour candles to currently, we are now under our support. So what does that mean for us? What does that indicate? Well, that is not a bullish indication if you were questioning that. That is more of a bearish indication. We need to stay above this line if we have any hope for an alt rally coming up. So this is a crucial chart to pay attention to. I'd really like to see total 3 break above 750 billion before we start entertaining the concept of an alt rally, but I do think that is possible. The problem is we are now operating in such a level of uncertainty that this is alarming to all markets. You see it affecting the stock markets, you see it affecting the crypto markets, you see it affecting bonds, equities across the board. Uncertainty is the worst case scenario. What we want, we can take bad news, because at least with bad news, we can send a direction. With good news, we can send a direction. So with the Fed's behind closed doors meeting, we're hoping that they're going to announce something. Now, just because they're having a behind the closed doors meeting does not guarantee that anything's going to be announced. They can just say, hey, we're going to do a taper, and they're going to start tapering out the printing, which isn't announcing anything. It's not going to change our markets, and it's going to keep us in this limbo, this unidentified point in time, which really is the most challenging time to be in the markets. And that's why the best thing to do is to be on the sidelines until there is some sort of confirmation or idea of where we are heading. And with all the uncertainty, that's just not a luxury that we have today. So we're waiting for the announcement to hopefully come out tomorrow to see how the markets react. I think that with the hostility going on with the countries as well, that's just looming news that affects the short term. But I don't know if that's really something worth paying attention to. It doesn't affect our fundamentals. So that news is kind of just being spread out there to create the fear. And currently, the fear and greed index for Bitcoin and crypto assets is still higher than it was in May of last year during the crash. So we're not at an all-time low. We're not at this horrible. We're just really sitting in an unknown level. And it's challenging for people because we just want to know, are we going up? Are we going down? What to expect? So in order to figure that out, we got to go to the charts. And this is Bitcoin on the 1 hour candles. And you can see what I've done here is I've put 2 beautiful boxes for you to understand what's going on. And in these 2 boxes, you can see these are our liquidation points. And in this box, there is $17 billion worth of short liquidations. And like I mentioned earlier, because everyone is uncertain and there's a lot of fear, people are shorting the market and driving it downwards. With that, that means that if the retail trader is trading downwards, the market will most likely try to push upwards to trap traders, to trap their liquidity, move up. And I would anticipate the move that would happen not to be a long-term or actual bullish move, because why would the market pick one or the other? They can have them both. So if we were to come here, you could see we would possibly tap up into here, maybe do a little retest possibly, or we could just go straight into an M formation and come down to this pool of liquidity. And that's something that I think people are waiting for. There's a lot of concern. I would be hard pressed to imagine they're not going to try and tap this pool of liquidity before taking us to all-time highs. But we're really curious. They also, as we've told you guys, there was a bigger pool of liquidity down here between 33 and 28. But what happened is, as the market starts pumping and moving, people go through FOMO and they decide it's time to change my position, and I'll jump in now, and I'll jump in now. And that's the whole point of these candles that tear upwards, is they trap the trader in thinking that they're missing out. And the whole game and the mentality of the market is to really trick the retail trader. And the point of being a successful trader, or being successful in crypto period, is understanding that mentality. The most crucial and important thing in all that we do is really understanding psychology. If you can understand the mass psychology, you're going to have your best chances against the market. You'll have a similar mentality as a market maker. And as we established earlier, the market maker always wins. They're never going to lose. They're always going to win. The house always wins. So I really want to stress this point. And I also want to reiterate that a lot of people are thinking long-term, and that's great. And if you're just getting into an asset to go long-term and you're not really worried about what happens between here and the next 10 months, then what we're talking about is not relevant. If you are concerned about what's going to happen in the next few months and you're not looking to be down 40, 60%, this is relevant. Market mentality comes into play. So it's very important to understand where is the social sentiment, where is the market mentality, and like we like to say, where is the market bullseye, which means where is the market maker going to make, oh, my apologies. Let me try and get this screen back up for you guys. The market maker wants to know where is the liquidation, where's our bullseye. So right now the market will make more money if it goes up than it will if it goes down. So therefore we're going to anticipate that it's going to go ahead and be a good business owner and make its business some money, irrelevant of what the retail sentiment is. So that's why I'm kind of anticipating some upward movement, maybe finish the month out in a little bit of a bullish pump. I definitely don't think this is going to be a long-term turnaround. We still have pools of liquidity to hit, and I'd like to see us use our resistance as support before any of that talk comes into play. Now let's look at our vital sign for Bitcoin, which is the dollar. Now this is DXY, and this is what we want to look at every day. And you guys are going to get sick and tired of hearing me say it, but we want to see the dollar show signs of weakness. And as long as we are in this wedge that we've had drawn out since June of last year, we are not showing signs of weakness. We are showing an upward trajectory. Granted, this would be considered in trading terms an ascending wedge, which is generally considered a bearish formation. So at some point, I would anticipate us breaking out of this and falling down. But with all of the uncertainty on the news, we're waiting for a story to drive this move. Now, we understand we have 7% inflationary numbers and we're at 0% interest rates. That's not sustainable. I think most people can really fathom that that's an unsustainable algorithm for an economy. So at some point, this is going to have to be addressed. We're going to have to address our inflationary numbers, and we're going to have to raise interest rates a little bit. That's fine. The markets are ready for that, and the markets can handle that. It's the people's reactions that generally creates the volatile action or the volatile movement in the market. And one of the best things to do as a trader or as a hodler is to have some of those really low orders set for the volatility that drives the market down. Because when the market does get driven, it generally likes to move in increments of 30%. 30% is because that is a liquidation level for Forex traders, because anyone trading Forex is trading on a 3x leverage. 3x leverage drop 33% is enough to liquidate anyone in a trade. So we'll see on textbook 33% drops and 33% consolidations, and also 66%. So it's something to pay attention to, something to keep an eye out, and something to also maybe anticipate some juicy orders if you're feeling froggy. So obviously not financial advice. We're not financial advisors, and I wouldn't take financial advice from anyone that looks like this. So please heed that. Let's move on to some fun, because everyone wants to talk about what are the alts doing? Can we have an alt rally? And I think Bitcoin could move sideways for the next 10 days. And we could have a little alt rally, a relief rally, where some of our favorite alts, especially some of these layer ones, start making moves. And the first one showing signs of that has been ADA. So ADA has been making some moves. We have a juicy pool of liquidity below us, and it doesn't look good in the long term. This is a 10-day candle on ADA. ADA is currently chilling at $1.05. And we'd like to see it at one of its support and resistance levels. And if you've been following the channel for a minute, you know ADA likes to move in increments of, or in ending formations of 2. So it likes 92 cents, $1.02, $1.12, $1.22. Those are all crucial levels that you can notice ADA sits at. So what we have here is, here's a beautiful box of liquidity from 92 cents down to about 67 cents. But 92 cents to $1.02 is really a nice idea for an entry point in an asset that you believe in. But we also want to realize that it does start to show that altcoins may be hemorrhaging in the near future. So unless we have some sort of turnaround or confirmation, I would be more prepared for altcoins to bleed than to pump in the current circumstances. So we really want to remove some of the uncertainty before we can feel happy about an alt season or an alt bull run, because like we just established earlier, you can see a close formation. And let's slide down to the 1 hour candles of, that's a little too tight for us, of a wonderful head and shoulders formation that just played out. So right here we had our head, we had our shoulders, and then down here we have our knees and toes. So the head and shoulders formation played out. It trapped everyone in ADA on the 1 hour candle that thought it was pumping. And now they're all stuck. This liquidity in this area is trapped. And what we're waiting for is the market going to recover that liquidity, or are they going to continue to trap traders in the downward motion? So also, I forgot to show you guys on Bitcoin as well that we have somewhat of a head and shoulders formation looming over us right now. And so you can see this pretty clearly on the 1 hour candles. We have our head formation at 45,400 up here. We have our shoulder formation at about 42,000. And the question is, are we going to fall down to our knees and toes at the 38 and below, $36,000 to $38,000 level? That would be the play out of the head and shoulders formation that we're looking at. Or we could also end up going into what's traditionally known as an M formation. So as you can see, up, there, up, down. And so an M formation is typically bearish as well. So on the charts, we're getting a handful of mixed signals, and I guess this is to be expected with all of the uncertainty going on in the markets. And so until we get some sort of confirmation on where the Fed, if we could have clarity from the Feds, we can work with whatever they decide and whatever they're saying. So we're really waiting for clarity on how the Feds are going to regulate and combat inflationary and CPI numbers. But back to ADA, because it's more fun to talk about alts, and I really think ADA wants to do a little bit of a pump. And why do I think that? Well, for starters, I trust my indicators, and want to point out I'm only looking at ADA on a shorter time frame, anywhere from like 2 to 5 days, and I like the indicators that I'm seeing. So right now on Cypher A, Market Cypher A, one of our favorite tools, please check them out if you're new to them. You can see we have green dots right here. And these green dots we refer to as buy dots. And these green dots typically show up before a healthy pump. And especially when they follow a blue triangle, the blue triangles establish a trend reversal. So when you see a blue triangle and a green dot, that is our indicators saying that this is looking like a trend reversal has been confirmed in, and the asset should start pumping. So the last time we saw that, we had our buy dot printed right here, and then ADA moved up 12% in 1 day, 8 hours. So that's a pretty good, healthy move. 12% in a day. I like that. What about our last green dot? Oh, we had another green dot here. What happened? Right after our buy dot, ADA pumped up another 10% in 1 day. So you can notice there's a little bit of a pattern with the exception of this buy dot, but it was not followed by a trend reversal, triangle. But this one was a false signal. So they're not a guarantee. It's not something that you can just blindly bank on, but it's definitely a helpful indicator in understanding and using that plus all of the other resources that we provide with you guys to deciding when's a good entry to get in, what am I looking at, how long am I going to be in it, and is now a good time? Everyone wants to know, is now a good time? Well, it looks like we are heading in the right direction. You can see market cipher B down here is moving upwards. So I would anticipate anywhere from 12 to 72 hours of some positive trajectory. So I know that I got my eyes on ADA right now. Definitely excited to see how it responds. I'd like to see it retest $1.02, or I'd like to see it come up to $1.12 and then retest it. So we're just gonna pound that into your guys' brains. Retest, confirmation. And once we get our retest of confirmation, game on. So that's what we got going on there. And then also our little gem, but we're not going to go too far, is right here. And look at this fun chart. It's a new chart, and it looks like it is getting ready for its next healthy leg up. So before we go into GOVI, how we found GOVI, token metrics, and why we like GOVI, let's go ahead and let Sifu give us some fun.
Good. Awesome. Thanks for that, Al. That was a beautiful assessment. And what's up, C3 fam? Yeah, let's do it. Let's check out the NFT charts. Take you on a little tour of what's been going on today. And actually, we were down. I'd still say it's obviously down a little. Most of the charts red, but within the last hour, it's actually come up. So we're actually up almost 2%. We're sitting at just over 39 billion for the NFT market cap alone. But as we kind of run through this, you can see everything still pretty down. Theta actually was down all day. It flipped right when the market cap flipped and started to go back up. And that's a pretty cool project. Decentralized streaming, so they got a lot of huge partners. So anyone who's into that and that sort of video content, I'd say check it out. But in any case, point is they made a sudden flip as well. So yeah, we're seeing a certain, I wouldn't say trend reversal, but a certain positivity happening. Uh, Smooth Love Potion hasn't moved too much, but actually it's been green on the charts most of the day compared to everything else sitting around it. And actually in the last 7 days, yeah, they're still up almost 50%. So that's not too bad really. So they're definitely kind of having a little fun moving on their own, which we actually went and got a couple AXIEs. We're still in the process of setting up a full team. But yeah, hopefully we'll take advantage of some of these Smooth Love Potion tokens and getting some breeding on that. But as we keep moving through, everything here, as you can see, is still red. Everything is pretty down heavily in a sense. Um, get down to here to Magic. I actually went and checked out Magic. I don't quite understand what it is. It's kind of masked in some sort of magic looking game about spells. But in any case, these guys have just jumped up and they took quite a little pump recently. And so it looks like they may be setting up again too. So, we do have a few gems along the market that are always moving healthy, but so you can see as I scroll down, and not much. But then once again, Splinterlands, this is probably the one new one that was been riding healthy all day. They're another like sort of magic card game. Pretty cool. I'll be playing Gods Unchained, but maybe I'll check this one out. In any case, they are actually on the up and rise right now. So they're moving. There's money being pumped into that. This Get protocol, They actually just made the flip. They were red, so obviously something's being pumped into there. Pretty interesting project. It's about like adding like a NFT or a smart contract to tickets. So you know, tickets have reward systems, whether they're like tickets to a baseball game or whatever. But interesting project nonetheless. Seems like there's a little bit of a boost going on. And then down here, these guys have been healthy all day. Gamma Extending Tech, interesting project too. It's where it's actually all about diamonds and gems and rare gems. So you can actually purchase diamonds and rare gems with crypto, and then obviously in turn probably put those on a marketplace and sell them. The whole deal. But pretty interesting project. Most of the projects on this NFT list today aren't so much games. They're more business ideas that are wrapped in using NFT technology and basically the smart contract system. But as I scroll down, Block V here and Curate, I didn't even have time. These things just recently turned green. And so it's pretty interesting as you kind of chase the market. Things are flipping a little bit. This Dope Wars game, I'm not sure what they are. Tried to check them out, but nonetheless, they're pumping pretty interestingly. And then as we come down here, Ecta is another sort of NFT project that's pumping. Rich Quack, some sort of AMM that's pumping. So, but you can see what's holding green is Smooth Love Potion. But what I really want to talk about that was actually holding pretty good is Ethernity. So just bear with me for 1 sec here. We got a pretty big list. I'm just going to go ahead and type in Nano. Actually, excuse me. I already had it pulled up. So these guys are actually one of the healthy pumpers on the day, and they're pretty cool. Ethernity, interestingly enough, they're down a lot. Their all-time high, I think, was up above $70. They're pretty low right now. So in any case, they've had a recent pump, or it looks like they're getting some momentum for that. And as you check it out, it's an NFT platform that's based off of sports license products. So it's actually pretty cool. So I'm guessing, if you want to get like a rookie card, like NFT version of that, you're going to be able to find that here. Being that we just had the Super Bowl and everything, it kind of makes sense to me why there's a sort of little pump going on. But this is a pretty cool project. It's definitely down low right now, so it's worth checking out. And if you're just a sports fan in general, I'd say this is a great way to get yourself to kind of get associated with the NFT platform and how they work outside of the digital and the play to earn gaming aspect of things. Because here you can actually just dig right into a passion if you are a sports fan, and if you're a boxing fan, you can get Manny Pacquiao cards, and these are cool. They work just like all sports kind of card packs. You get card packs, and within the card packs, you'll have possible rarities, just like you would, and just like any old sports card collecting. So I think this is pretty cool. This may be something to keep your eye on, and it actually may begin to gain some momentum because anything in the sports world usually has a pretty big backing behind it. And yeah, honestly, I may buy a couple packs myself. But other than that, the market it hasn't been very exciting today, except for the recent just turnarounds it's had. So, and then on that note too, everything I think is getting set up. We just heard a really beautiful assessment with Al giving us a breakdown of how things were moving, the liquidity pools that we're looking at. So granted, we know the NFT market can move on its own. It's always direct correlations that do happen. So if we do see a little alt pump this weekend, we're definitely going to see that happen on this chart as well. So yeah, we'll be keeping our eyes open for that. And until then, I'm just going to have to close off the NFT section for now. Thank you for joining, and I'll be back with more.
Thank you, Sifu. I appreciate that, but don't go far because I'm going to bring you back on in just a minute. I think we got something exciting to show our viewers.
All right. Let's do it.
But In the meanwhile, I'm going to talk about the fun that we do have in the charts. There is some fun and there is some excitement, and that is what I brought to you guys earlier. Before I jump in, thank you for tuning in to C3. We appreciate everyone. If you guys are new to the channel, please like and subscribe. Also, if you appreciate the content or if you want more things, feel free to comment. If you want us to check out a project that you're into, let us know what you're looking at, and we'd love to help you out. That being said, this is our baby of the week, or at least of the day. So I really like GOVI, also known CVI. So before we even go too deep, what is CVI? CVI is a crypto volatility index. So the CVI is measured, it's a measure of the future expectations of crypto volatility. The index provides an accurate insight into the market sentiment as reflected by the Bitcoin and Ethereum options pricings. So to start trading the volatility today, you go to CVI.finance. Now, CVI uses a token called GOVI, G-O-V-I. Now, GOVI is a governance token for the CVI protocol and platform. CVI is a decentralized volatility index for the crypto space, powered by the CODI network. Holders of GOVI will vote on the CVI key matters such as the tradable assets, leveraged use, deposit amounts, platform fees, and more. So that's a quick overview of what this project is. We will be diving deeper into it, but why are we even looking at it? How did this come to our attention? Well, like we tell you guys every stream, we rely on our tools and our indicators. And this gem was found on token metrics indices. So you can find GOVI on KuCoin, and that's where we went on to the token metrics indices. We pulled up KuCoin and we were looking at the daily, the weekly, and the monthly. And CVI showed up in a 20+% allocation for the week. So that caught our attention and we figured it's time for us to learn about this project. So let's take you guys down the rabbit hole with us. Also, this is the other reason why we're looking at it. We'll come back here. This is GOVI. So if you want to check out GOVI for yourself, you want to go to CoinGecko and you want to type in CVI, or you can type in GOVI. It'll take you to the same page and you're going to realize that you're looking at a project that's up 14.1% on the day. Feeling pretty good about that already. What is cool about it? Well, it's got a very low total supply of 32 million tokens, and we have about a third of them already circulating, which means 11 million tokens have already been minted, and there's only 2/3 left to ever be in existence. Currently, it has a market cap of $15.665 million. We have a 24-hour trading volume of $407,000, which is typically lower than the kind of projects we like to bring to you guys. But remember, sometimes it's best to be first. So in order to be first, you got to take some chances on things that aren't really fully established and still have a little bit lower market cap and trading volume. The total locked value is $3.7 million. So they already have 1/5 of their market cap locked up. So that actually shows stability, it shows strength, and it gives us a little bit of peace of mind. We're chilling at market cap 990 even. So we're chilling at market cap 990. We've had a all-time low of 56 cents, and we've had an all-time high of $7.66. And I want to repeat, we're only at $1.40 as we speak. So let's look at what can we learn about GOVI, why are we even interested in it, and what is their mission? Well, for starters, you can start trading GOVI on Polygon today. So now we're on multiple platforms, pretty exciting. Remember, they're built on CODI, and they really are more like a hedge against volatility. So I know that may be confusing to some of you. We're going to get into that. But the crypto market's future volatility sentiment has trended lower over the past few days. Do you see volatility picking up soon? Here are your thoughts. In the meanwhile, start trading CVI.finance or GOVI. Not our recommendation, not financial advice. This is what they're recommending on their Twitter page. You can find their Twitter page on CoinGecko as well. But we want to go into their website and figure out a little bit of what's going on. So here in the website, you can see crypto volatility updates. So crypto assets have rebounded positively since their last update, and they do an update about every day on here. And there appears to be an increased hope and optimism despite ongoing geopolitical tensions. It has definitely been a much calmer week compared to what we have experienced so far in 2022, which says a lot considering it's just February. However, there is an expectation that the market activity will continue to pick up as inflation and employment growth and other market-related economic numbers are released, particularly in the US in the coming weeks. Remember, July 3rd is a huge day for the Feds. July 3rd is when all of the inflationary numbers and their plan of attack needs to be announced. So they can keep us in limbo, but after July 3rd, they're going to have to tell us something. So some of the related points, the crypto volatility index trended lower this week, maintaining an average value of 74. After a few weeks below this value, the overall crypto market cap is back up to 2 trillion range, a good indication that the crypto winter might be easing up. They also talk about market movements for Bitcoin and most of the major altcoins. The path back to previous all-time highs will undoubtedly be driven by investors acting optimistically towards both global economic events and cryptocurrency's utility or use case. And remember, they're stressing that we need optimistically. Now, unfortunately, right now we're under a large portion of speculation and skepticism. So we don't quite have optimism yet. But when optimism enters back into our markets, you can expect a positive reaction. So focusing on the economic side, the impact on crypto markets this week was positive. Bitcoin crossed the $40,000 range, seems to be maintaining a floor of approximately 43,500, while it's trailered ETH in most major altcoins on a 7-day basis. BTC outperformed on a 1-month basis by about 4%. So a lot of great updates on here that you can get daily. The volatility index was pretty fascinating. So the CVI index was a lot more stable this week. After reaching a low of 70 over the weekend, a mild run-up in future volatility sentiment saw the index reaching a current week's high of 75. As the inflation numbers get released this week, all eyes will be on both CVI and crypto's options market for a glimpse of where traders see crypto assets in the next 3 to 6 month horizon. So meanwhile, it is also a stable week on the ETH, which measures Ethereum's futures volatility sentiment. A look through the chart shows it has maintained a floor of 80 over the past few days and a considerable drop in future volatility expectations. So one of the cool things about CVI is you can go to their website. This is cvi.finance, and you can really get a quick understanding of what's going on. So CVI, make volatility your asset. Like I said earlier, this is like a hedge. The crypto volatility index is a decentralized VIX for crypto that allows users to hedge themselves against market volatility and impermanent loss. So as you enter the platform, you can go through, you can explore CVI Platform with trades. You can find profitable trading opportunities without committing to a direction of the market. Sounds like a luxury. And if volatility increases, you make a profit regardless of the price change. So at this point, you're not betting on a direction, you're betting on volatility. So it's a different way to play the market. Really interesting, really excited to see how this is going to play out. I expect to see them in the space. Also, you can provide liquidity. You can earn a share of all trading transaction fees by providing liquidity to the platform. Moreover, profit when volatility decreases. You can also stake. As you guys notice on the Twitter page, they opened staking on the Polygon. So we're staking on multiple platforms. You can gain governance rights and platform fees from all supported chains within a few clicks. And we're going to get into what chains that includes. Also, arbitrage. Maximize your revenues from your trading strategies by profit from any deviation between the volatility tokens added in DEX, AMMs, and the CVI platform. So Professor Dan Galai said, I am confident the CVI team has the knowledge and capability to put theory into practice and build a truly useful product in the cryptocurrency space. Now, this is the creator of VIX and a CVI advisor. So that's very promising to hear. They also talk about how GOVI is a DAO token and what volatility tokens are. So I believe most people on this channel are familiar with DAO tokens. It includes a decentralized governance components where holders of the GOVI token can vote on matters such as tradable assets, leverage use, deposit amounts, platform fees, and more. By staking your GOVI, GOVI holders will also earn a share of the fees collected by the CVI platform. Now, volatility tokens bring a new and innovative concept for trading while making the CVI ecosystem composable with greater DeFi ecosystems. The architecture is based on the first of its kind funding fee adjusted rebased volatility tokens. Therefore, the tokens remain pegged to the index over time, allowing any user to buy and sell the tokens on secondary markets. Fascinating concept. As far as I'm concerned, or as far as I'm aware, they are the first people trying to make this kind of move in the space. I don't know of anybody that competes in the same dynamics, but I definitely went in to check out their platform, and this was a wild page to get to. So we're still new to the project. I wish I had a greater understanding of it so I could educate you guys in a better format. But what we're looking at, as far as I understand, is this is the total volume per ecosystem. So you can see the total volume of the Ethereum platform over time. So in April of 2021 was pathetic compared to February. You can look at a total volume of, oh man, I was better at commas, 154,478,582 currently, as opposed to 7,682,140 in April of last year. So that's what we're looking at on this charts. There's too much on these charts for me to explain to you guys, but I'm just going to briefly go over. This is the total volume on Ethereum platform over time. Now we have the total volume on the Polygon platform over time. You can also continue down and get more analytics. You can look at the total fees collected by the platform. And remember, if you're holding the GOVI token and you're staking it, you're also the one earning the rewards and gaining from the fees. So it's crucial to understand who has more fees. So over here, you can see which platform is collecting more fees, and that might be the platform that you want to choose to stake your GOVI on because you're more likely to get a higher return. Also, total fees collected on the platform Polygon chain. You can see that they also have the amount of GOVI staked on the Ethereum platform versus the amount of GOVI staked on the Polygon platform. We also get the privilege of seeing the price of GOVI over time, the circulating supply of GOVI on the maximum supply, and the weekly trading volume of GOVI tokens. So very exciting. Then you also have their DEX over here. You have the CVI.finance/platform. And this takes you into trading or providing liquidity. This is the platform, the staking, the volatility tokens, the analytics, and the documents. And this is where you have all of your GOVI fun. You can connect your wallet right here and begin playing in the world of CVI. So if you're unfamiliar with it, I encourage you guys to dive down the rabbit hole, get a little education on it. It's a great project. It's something really exciting. And it's definitely my favorite project of the day, and it might be my favorite project of the week. So since we're talking about our favorite things, I think that's a wrap. I had a lot of fun today, but I know that Sifu's got some gold for you that I'm excited to see. So I'm ready to shut up, and I want to see what's going on with that fun. So I hope you guys enjoyed the stream so far. Thank you so much for tuning in. Let's let Sifu wrap us up today and look at these fun, beautiful little creatures. Much love, guys.
All right, what's up, everybody? All right, so we are on the Axie Marketplace because, like I said earlier, we had purchased some Axies, but I'm going to kind of run you guys through this again since we have a little more experience on it now. But once you are in the marketplace, like I said, first thing you want to do is you want to come to the side panel over here. You want to go to your breed count. Just set that to 0. Let it update. All right, now that we've done that, now we can start looking at some Axies. So we were actually having fun checking them out. Once you click on, you can like see everything that's going on. You can see their attack values, their defense values, you know, the moves that the cards do, their overall stats. Once you actually kind of allocate the players you want to buy, any of you are out there buying them, buy them instantly. Buy them as soon as you know. Because last night we had a whole list of Axies we were writing down to buy because there's literally thousands and thousands. And you know, you want to narrow down all your options, find the ones that meet like your standards. Man, some of them sold out in that process. Like you literally looked at one, waited 2 minutes, and then it's sold. But having said that, this is what we did get. So we got this guy right here, pretty funny little Axie. He's just got a number, some of them got names. But we got ours based off of attack values. So we're trying to get high attack values. This guy's going to be one of our attackers. And we also got this dude right here. Pretty funny. They're actually kind of funny as you go through them. Some of them resonate with you. But this guy's actually got a little bit more on the defense side. So far we got an attacker, a defender. We're looking for another defender. You need 3 to actually play, but you can have bigger formations than that. You need only 2 to breed. So we're also going to do that, and that's why you want to pick the breed count to be 0, because if not, you're going to have to, it's going to cost you a little bit more. You want to start right at the bottom as you're breeding. So having said all that, we'll definitely update you guys when we got a full team, and once we throw these little AXIEs into battle and get a feel for that. But we're getting there. We're making steps forward, and yeah, it's been fun. And I'm gonna have to say that's gonna be it. We're gonna have to wrap it up from there, guys.
Thank you, Sifu. Really appreciate it. And that's the excitement. I know I'm more excited about those little AXIEs and what the market's doing right now. I know it's a little bit more validating and a little bit more fun. Market sideways, and until we have anything good going on, that's really where our heads are at. But to leave you guys with a little juicy fun, this would be my prediction for GOVI on its next pump. And this is why it's what we're talking about. So hopefully that's some fun for you guys. Hopefully you guys understand this chart. And if you don't understand this chart, tune in tomorrow. Keep learning with us because we're here for you. So thanks for tuning in for another C3 Live at 5. So much love, so much appreciation. Hope you guys have a great start to your week. Happy Valentine's Day. And let's get this going. We'll see you tomorrow, live at 5. C3, over and out. Much love.